Chats, I'm going to talk about what you need to know if you're thinking about selling in 2020. Well, it's been another interesting year in the Perth property market, with buyers and sellers alike asking, when's the market going to turn? Fickle is a word I use a lot to describe current local conditions, but I always stress the market isn't homogeneous and that Perth consists of many different micro markets that vary between suburbs and property types, some of which are performing very differently to others. There are, however, some generalisations that we can draw upon for anyone that's looking to sell in 2020. First off, I think we can expect more of the same. Until such time as local economic conditions improve, including wage growth, employment growth and population growth, I personally can't see the market doing anything other than bumping along at its current level or for a minimal amount of growth to occur next year. Look, whilst it seems that economists agree that interest rates are likely to remain low for the foreseeable future, credit still remains tight from what we can see, despite the removal of the 7% serviceability test, and local consumer confidence continues to be subdued. Second, property sales transaction activity is at its lowest level in 28 years. Yes, you did hear that correctly, 28 years. In fact, it's plunged 47% in the last 5 years alone. More homeowners are choosing to stay put, mostly because they feel that they've lost money since the boom, but buyers are also holding off from making decisions to buy. It's not unusual, and it hasn't been for a while now, to meet buyers that have been shopping for a new home for years because they haven't yet found the perfect one. If it doesn't suit, they're just not going to buy it. That's not something that they had the luxury of when it was a seller's market. Near enough needed to be good enough. There's no pressure for buyers to buy, and for the most part in the last 10 years, they've actually been rewarded for waiting with prices coming down. Which leads me to my third point. Be realistic and market ready if you're thinking of selling, or don't bother. Look, if you're not prepared to do what needs to be done to get your property ready for sale, or to price it appropriately, which is the most important part, to meet the market, you're unlikely to sell or end up with a very poor result. Market readiness is everything at the moment when it comes to a successful sale. So you need to make sure that you speak to and get a good agent that's not afraid to tell you what you need to hear rather than what you might want to hear if you're thinking of going to market in 2020. That said, if your plan is to hold off for better market conditions, please realise that there can be a cost in waiting also. If you've got a newer or more newly renovated home, you're going to need to weigh out the cost of holding up for the market to improve against the loss in value that's going to occur through depreciation on that newer build or those most recent improvements, and most people don't factor that in. It's the market. If the market movement is minimal, for instance, it might not be enough to compensate you for those depreciation losses that are occurring, so you could end up worse off. And if you choose to rent your property out, you've also got to factor in tenant wear and tear and any potential costs of reinstating the property to the previous condition when you do come to sell. Waiting or renting can initially seem like a good idea to avoid a real or perceived loss, but it's not all upside. So make sure you do your research and get some facts. Please, though, don't think that it's all doom and gloom ahead. There are still parts of the market where buyers are keen and active, albeit they're price sensitive. On that note, if you've got a character home on a full block in the Mount Lawley High School zone, I'd really love to talk to you about potential off-market sale opportunities. So that brings me to trading up. Whilst it might be difficult to accept that the value of your property is less than what it was at its peak in 2014, or for some people when they bought it in the last few years, the gap between where you are now and where you want to be is probably at its lowest point ever in the last 12 years. Remember that a 10% jump on a $500,000 property, which is $50,000, is half that of a $1 million one. So delaying making a move until the market is rebounding could actually cost you more money, particularly if you're looking to buy into that next level up from where you are. And any growth that you've made on yours is going to be negated by the increased price of what you want to buy. And last but not least, my best advice if you're considering selling in 2020 is to get good advice. Speak to a quality local agent whose primary interest is in providing you with factual information and feedback to assist you to get ready or to make the best decision. Not just tell you what they think you want to hear so that they get a signboard with their name on it. Talk to your broker, talk to your accountant, make a spreadsheet. It can be very difficult to make rational decisions, particularly when you're faced with what feels like a loss, as your brain will do everything it can to avoid that pain. So please ensure whatever decision you make to sell or to stay is based on logic rather than emotion and trying to avoid that pain. If you are thinking about selling in 2020, we've currently got a great sign up now, sell later promotion where you can get to choose from some fantastic complimentary marketing options that we're giving away, such as property video or social media promotion, which can normally cost over $300. So if that's something that's of interest, call me on 0405 812 273 or email me at natalie@bellcourtproperty.com.au to make an appointment. I'd love to come and see your home and have a chat. Have a great day.